Angel investing, LPs, and other ways to use your IRA to invest in a business. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial, and welcome to another episode of Adam Talks Retirement and Investments. This is going to be a fun episode if you are looking to potentially invest in startups, mature companies, whether it's through venture capital, angel funds, private equity, hedge funds. It's important to know how your IRA can benefit you and how to do it and what you need to be aware of. So let's start at the first thing. What is angel investing? So angel investing means you're basically investing in very, very early stage companies. Okay, so basically a business plan and an idea. These are the earliest stage. This is even before venture capital gets involved, right? It's 20 grand, 5 grand, 100 grand. It's hey, I got this new idea. I need some fundraising to start it. So it's really before the company even has any revenue. But the whole concept of using an IRA to invest in a business as a limited partner, and that's what an LP is one of the reasons that Congress allowed IRAs to be invested in alternative assets. They understand that the retirement system could be a huge, huge benefit to the American economy, American capitalism, right? So it's very important to use the concepts of an IRA to fund new businesses. So what's the advantage? Well, obviously the advantage is tax benefits, right? The Peter Thiel model. You put in $1,200, you invest in PayPal stock, and it turns into $30 million tax-free. You invest 500 grand in Facebook, turns into $350 million tax-free, right? The tax-free is the most important concept in that previous sentence, right? The investment's the investment. You can use IRA or personal funds, but only if you use an IRA, if you structure it properly, then you can shelter all the appreciation and gains from tax. A few things to keep in mind on how to maximize your tax benefits. Number one, in order to generally do angel investing, if you're doing it through a fund rather than just friends and families, you need to technically be an accredited investor. Now, there is an exception if the company's raising less than 5 million and they file a Reg CF crowdfunding, technically that investment can be open to non-accredited investors. Who's an accredited investor? Someone that has at least $300,000 of net income, married, filed jointly, or I'd say $1 million in net worth, excluding a primary resident. So that means if you only make 50 grand a year, even if you went to Harvard, technically, and you don't have $1 million in net worth, excluding your primary residence, technically you can't invest in a lot of these angel investment venture capital deals. Now, there are some pushes in Congress to get that modified. It seems kind of arbitrary, but that's just the way the rules work. So that's the first hurdle to get over. Generally, to do an LP angel investment in a business through an IRA or any vehicle, whether IRA or not, you need to be an accredited investor. The second, from an IRA perspective, is you want to be able to shelter all the gains from tax. And the general way to do that is if the underlying company is a corporation. So yes, you can invest in an angel fund as an LP, that's a partnership or an LLC. But if the underlying company, meaning the portfolio company, the investment company, is a corp, an Inc., then there is no tax, which is known as UBIT, unrelated business income tax, which is a tax imposed on IRAs and charities on business income, okay, active business income, which would occur if your IRA invests in an angel company that's a pass-through entity like an LLC. If that's the case, there are ways to minimize the UBIT tax, which can go as high as 37%, through a C-Corp blocker that would reduce it to 21%. Maybe a foreign blocker, which could potentially reduce it to 0, and then some other structuring. But if the angel investment, if your new startup is an LLC, you have to consider UBIT, okay, unrelated business income tax, which is an important factor and something why I think it's important to work with the right people when setting up these structures. In sum, make sure you generally have to be an accredited investor. If you're using an IRA to be an LP, limited partner in an angel fund, that's cool. You're going to hopefully shelter all the appreciation from tax. Remember, angel investment is risky. It's generally a 7 to 10 year window. Even the Googles, the Ubers, they take 7 to 10 years to really drive revenue to their shareholders. And then remember, if you're investing in a pass-through entity, an LLC, not that the fund, but if the portfolio companies are an LLC, you got to be wary of UBIT. There's ways to minimize it or block it using the C-Corp structure, but work with the right people, talk to the right people. So I went to law school. I have a master's in tax law. This is just the stuff that I'm able to help people with, where if you don't have the qualifications and expertise, you're just not going to be able to do it. So that's it for today's podcast. I hope you enjoyed it. If you're watching on YouTube, appreciate it. Great way to learn a lot about retirement, investment strategies, concepts, alternative assets. There's a lot to learn, and love sharing it with all of you. So thanks for hanging out with me today. Have a great day, and I hope to see everyone again next week. Ciao.